Good morning, good morning. Thank you guys so much for tuning in to today's live stream. It is July 28th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So, for this week, coming into Monday, we actually don't have any news at all. However, throughout the week, we do have JOLTS job openings. We have NFP week here as well. So on Wednesday, we have ADP non-farm employment change. And then we also have advanced GDP quarter over quarter. And we also have FOMC week this week as well on Wednesday. So the federal funds rate is going to be released here on Wednesday at 1 p.m. alongside unemployment claims here on Thursday, core PCE price index month over month, so that's an inflation indicator. So we have a lot of volatile news coming into this week. You're going to want to be a lot more nimble and just understand that if there's going to be a lot of price swings, you might want to scale down and not leverage as much as possible, right? So taking fewer contracts, maybe lowering your risk appetite. But those are some things that you want to consider coming into such a volatile week this week, right? There's inflation indicator, there's employment indicator, and there's also interest rates going to be released here coming into this week. So be nimble, but also you want to be attentive, understand what the data is showing us, right? And let's begin today's technicals. So to start off the week here on Monday, I do want to mention that, I guess the first thing I want to start off with here is to take a look at the previous weekly candle and how that candle closed and how that's going to affect my decision making coming into this week. So where the blue line is drawing your attention towards, that is the previous weekly candle's closure. And with the way that we closed on the weekly candle, I can make the assumption that we should most likely take out the weekly high. And yeah, so the whole idea is you want to ask yourself, will prices take out the weekly high, or will we take out the weekly low? Well, if prices are efficient, then we should manipulate lower, take out the weekly high. After we take out the weekly high, I don't care if we reverse or continue to expand higher. The only thing that I'm looking for is for us to take out that weekly high. And so coming into the Sunday's open, you probably did notice what we did do, right? So we actually had a gap up coming into Sunday's opening, or I guess coming into this week. We gapped up, and then that means we completed the weekly objective, right? We took out the weekly high, and now can do whatever we want on the weekly time frame. I'm not going to force an objective anymore on the weekly candle. I'm not really anticipating much, right, anymore on the weekly time frame. And so my best bet coming into today specifically in the morning session is that I would most likely utilize the 4-hour candle here and the 8-hour candle. So here's the current 4-hour candle and here's the current 8-hour candle. Those two candles are going to close here within 23 minutes or so, and depending on how those two candles close will give me a morning objective, right? So if the 4-hour candle closes bearish, I'll target the 4-hour low. Same thing here on the 8-hour time frame as well. If we close bearish, I'll be targeting the low. If we close bullish, I'll be targeting the high. Pretty simple approach in the way that I'm approaching this morning, right? It's not very hard. The only thing that I do is I look at where the candle closed, and if the closure is closer to the high of the candle or is it closer to the low of the candle. That's pretty much all that I do. It's pretty simple, right? Not much. You can't really go wrong with that, right? And yeah, so that's kind of where I'm at here coming into the morning session today. I'm just going to be rather patient coming into today because of the fact that we did complete the weekly objective and daily objective, right? If you did notice the daily candle here, its high, the daily high was the same high as the weekly high, and so the whole idea based off of that information is that we should complete the weekly objective within the next day, because the daily objective is the same objective as the weekly objective. And yeah, so it's just something I do want to reiterate, and yeah, that's pretty much all for me for the morning session of today. I'm just gonna wait, be patient, and see how we do end up closing here on the 4-hour candle and the 8-hour candle. Not really trying to force anything to happen. Alright, like I said, just waiting really patiently on how the 4-hour candle is going to close and how the 8-hour candle is going to close. I think for now I'll go into some of the pros and cons for this week and just reinforce some good habits of mine and maybe change up some bad habits. Alright, so for the pros and cons coming into this week, I want to mention, the first thing that I do want to mention or go over is to continue to take consistent setups. Every single setup that I take is going to have 3 things that I always look for, right? First is a higher time frame objective. Second is a model, and third is a entry pattern, right? Higher time frame objective is essentially the bigger reason for why I want to see prices continue in a specific direction. It's my directional order flow, my macro perspective, directional order flow, right? And my model is how I align myself with that higher time frame order flow. It's going to have its own objective, but that objective is going to be different than the higher time frame objective. But both the model and the higher time frame objective should be suggesting the same idea. If the model in the higher time frame objective is suggesting lower prices, both of those components should be suggesting lower prices, right? Vice versa for bullish prices. And the last thing that I look for in a setup is going to be an entry pattern. My entry pattern of choice is always going to be a fair value gap, as for me it's easier to see. The way that I interpret the data of a fair value gap is to me it makes sense, right? A fair value gap indicates that there is strength in the markets, and it shows that there is a willingness to continue in a specific direction. And I'll go over more into that about what a fair value, what is a fair value gap and what a entry pattern would look like, right? But that's the first thing that's on my list. That's the first pro. So continue to take consistent setups. The second thing here coming into this morning is I'm going to pay close attention to SMT and how, or depending on if there is SMT and if there's not SMT, will give me an outline of what I'm going to do in my trade, right? So the idea is, I guess the idea of SMT is that there's going to be two or more correlated assets, and if they are correlated assets, that means they should be essentially trading in the same direction, right? So like here on ES, we can see that we had that gap up higher and we're starting to sell off here. Same thing here on NQ, right? They are correlated assets. I remember whenever I first started this whole journey, I thought these two things were the same, right? I thought this chart on the right and this chart on the left were the same like asset, but they're not. They're correlated assets, and sometimes ES will have a higher high or NQ will have a higher high on ES, right? So notice how their highs and lows are relatively the same, right? But with SMT shows you that there is a manipulation, that there's been some sort of intervention in the markets. And so the two takeaways from SMT is that you want to ask yourself, if there is a presence of SMT, then you have to understand that there's a possible reversal. But if there's a lack of SMT, then there's a potential continuation. Prices are always going to expand until there's a SMT between their correlated assets, and that's when it allows prices for a reversal, right? So that's the second. The third, I have to really understand my actual strategy, expansion model and EQ model. I'll go over those two. I'll actually go over that later this live stream, but just keep in mind that there's two things, or I guess two models, that I kind of structure my trade around. Fourth is to utilize every single time frame. Every single time frame will have its own objective, right? On the weekly time frame, like I stated coming into today on ES, or I guess on NQ, I wanted to see us take out the weekly high. But if the idea that prices is fractal, then that means that I can apply the same concept but to the 4-hour time frame. I can apply the same concept to the hourly time frame, the 15-minute time frame, heck, even the monthly time frame, right? And so that allows me to take these different setups, but they're all going to have the same general outline. So that's that, right? To utilize every single time frame, understand that every single time frame has its own objective, and you have to understand every single time frame to understand this full story, right? And the last thing is to be patient. There is really no need for me to force things to happen. We are at all-time highs right now, and it's like emotions here now. Like if you think of all of the investors, all of the traders as a collective right now, emotions are probably going to be, why didn't I join this leg up? You know, can I still enter? We still have so much room. Oh, we might reverse here. There's a lot at all-time highs. That's when mixed emotions and just human behavior is going to be a kind of a slouch to your performance, right? And so I have to remind myself that coming into this week is that there's no need for me to be in a setup if my strategy isn't present, right? I don't want to force things to happen. I want the trade to come to me. I want the market to present me with what I look for. I'm not going into every single session imposing a will, right? Forcing things to happen, trying to manipulate prices to which will fit my strategy, right? Whenever I first started this journey, I tend to like almost force things to happen, meaning that I would almost make up new strategies just so that I can be a part of the price movement, right? But that didn't work out, and that really taught me a lesson of just be patient. Your time will come. Continue to do the things that will assist you in the preparation for your execution, right? And which is why I'm doing this right here. And so to really wrap things up here, it's just basically pretty much a summary of the pros and cons. Improvements, right? First, consistent setups. There are 3 things that I look for: higher time frame, objective, a model, entry pattern. Those 3 components should always be identified before I even press the button. Second, I want to watch closely between the relationship of NQ and ES, as their relationship and how swing highs and swing lows might differ will show me if there's been some sort of manipulation, right? Like I stated, if there is SMT, then you have to accept the fact that we could reverse. If there isn't SMT, then there is a potential for a continuation. It's not guaranteed, it's just more probable that we should continue in whatever direction prices is already going if there is no SMT. Third, be proactive, be present, take every single opportunity that is present. And like I stated before, you kind of have to balance that with the fact that you shouldn't be forcing things to happen. You shouldn't manipulate your vision to kind of see prices to where it would only fit your strategy. I think the main thing that kind of switched my perspective is that I'm not necessarily going into the markets on why I should enter the markets, right? I'm kind of viewing prices to why. I'm asking myself, why shouldn't I enter this here? It's a more, I guess, defensive approach, but it does force me to be patient, to be disciplined, and whenever those opportunities do present, it's more probable, right? As if I can layer on reasons on why I shouldn't take the setup, and I end up like, if there's reasons why, if there are things that I look for on why I shouldn't take the setup and I can't find a single reason why I shouldn't take it, then that's telling me that, hey, I should probably take this, right? Fourth thing here is I want to be paying close attention to entry pattern. This is going to be for a whole different video or stream. Entry pattern tells you a lot. Brief summary is that sometimes a fair value gap shouldn't be entered, and sometimes a fair value gap should be entered. There's a mechanical reason on how you can observe this and understand when a fair value gap should be a breakaway gap and when it shouldn't, and I'll go over that in a different video for you guys. And the last thing is, I really want to be able to track every single setup that I take, tracking my journey, journaling every single execution, journaling every single trade that I take, right? And yeah, so that's gonna be all for me coming into today. Heading back into the actual charts here is where we are right now. So let's take a look at the 4-hour candles here on NQ and ES. So on ES, which is the left side, you can, I don't know why my mouse is glitching so much. I'm not even moving it, but okay, well, I don't know why it's being so weird, but the fact that the 4-hour candle closure here on ES is bearish and on NQ is bullish makes me not want to be a participant in this market right now. It's not where I want to be, and it's not ideal. So yeah, that's just something that I am considering, is not being a part of anything. Really not much for me to try to force here to happen, right? That's one of the pros and cons, is to not force things to happen, right? The fact that there's an SMT, or not SMT, but like, because of these assets are not correlated right now, it's not incentivized to me to be a part of the markets right now. Being very patient and nimble, utilizing every single time frame to my advantage. Here, you gotta mark this, however, though. Yeah, the fact that ES is, trading lower and NQ is trading higher isn't like the best environment. They should be correlated, right? They should be going in the same direction, but the fact that they are not is a telltale sign that I shouldn't be a part of the markets right now. About 4 minutes left until the closure here. You know what I found out today while reading the Wall Street Journal is there is a Trump media and technology group. I don't even know what this is. Like, what is their model? What's their business model? It's actually like so interesting to me that our president has a stock. That's actually so funny. Oh wait, what am I doing? Like, I want to see is this company profitable? As his IPO, it opened up at like 16 per share, spiked up to 137. Wow. And it's trading at $19, so it's basically back at where it opened at on IPO day. That's interesting. It didn't have much of a spike, or it did have a spike up actually. It spiked up to $55 a share during October, November. Truth Social media streaming news. Truth. Well, I don't understand. Isn't this like our president has a crypto platform, fintech? Isn't it incentive for him to create regulations that would benefit his business? It's kind of interesting, right? Like, So it's like Truth Social is like kind of like, I'm assuming it's kind of like Twitter, X, digital advertising, crypto treasury strategy. A lot of companies are doing this now, where they are buying up a lot of crypto as assets and using the surge in price to make a benefit from it. But I think this is like, all I'm hearing is very, very leveraged. It's a very highly leveraged company right now, or I guess environment. So there's the market open. Like I stated before, ES closed bearish, NQ closed bullish. Not ideal environment. It's something that I'm not even going to look at what we do here. This is not something that I want to be a part of. And so I'll just go over a expansion model with you guys and kind of go over what I mean by expansion, right? So there's two models that I base my trade around. It's expansion and equilibrium. For today, I'll go over what the expansion model is. Alright, so expansion model. The thing that I want to go over here with you guys first in this specific setup is I want you guys to take a look at the way that we closed here on the hourly candle and the way that we closed here on the 30-minute candle, right? So both of these candles here are suggesting to me that we should most likely take out the 30-minute low and the hourly low, right? Within the next hour, within the next 30-minute, we should take out their respective low. That gives me already a higher time frame objective. I'm bearish for the next 30 minutes, for the next hour, and I want to see us take out their low. A more objective way of looking at this is that you want to ask yourself is the closure of the candle closer to the low, or is it closer to the high? If you can answer that question, then that's gonna give you a directional bias. It's pretty easy, right? You can apply this to every single time frame, and it's not going to guarantee a setup, but it gives you a general idea of where prices should be going. And then, so the way that I align myself with this bearish higher time frame order flow is by going onto the 15-minute time frame. And I noticed that this 15-minute candle here that we create, it's bearish, right? It suggests to me that we should take out the 15-minute low, but after we take out the 15-minute low, should we be continuing lower? The answer is yes. And the reasoning behind that is based off of what we just went over, the hourly candle, 30-minute candle, right? Here's a little bit more information. So the 15-minute low is where that well, I actually have it like identified for you guys. 15-minute low and 30-minute hourly low. Notice how there's two different lows, but they suggest the same idea, right? Both of those time frames are suggesting lower prices. And so the only thing that I really look for now is that I should be looking for an entry pattern, right? And so I noticed that there's a 2-minute fair value gap here that should be respected if we are going to continue lower, which we should be. And so here, I set my entry pattern at that 2-minute fair value gap. Here you'll notice that here we rebalanced back into the 2-minute fair value gap. We respect it. We take out the 15-minute low. And the reason why this is called an expansion model is that we shouldn't stop at the 15-minute low, right? We should continue to expand lower towards the 30-minute low / hourly low. That's the whole idea. And so we did that, and it ended up being a pretty profitable setup. That's the expansion model. Very simple approach, but there are some key characteristics that make it very powerful, right? The fact that there is a higher time frame relative to your model, that suggests that we should be expanding, that we should be continuing in a specific direction. Alright, and I think that's going to wrap it up for today's live stream. I've gone over the pros and cons, the improvements. I went over the expansion model, and I basically went over why I'm not going to force anything here coming into the morning session today. Like I stated, the fact that we've had a pretty the fact that we have different narratives on NQ and ES really makes me I wouldn't say concerned, but it really makes me a little bit more more aware of what's actually going on between the relationship of NQ and ES. And yeah, until next time, I'll be live streaming tomorrow. But yeah, thank you guys so much for tuning in, and be safe.